If you've noticed your grocery bill increasing lately, you're not alone. Inflation continues to rise, and the data confirms it. According to the latest Consumer Price Index (CPI) report, inflation has ticked up to 2.7%, just slightly higher than last month's, to 0.6%. The Federal Reserve aims for a 2% inflation rate, but they assure us that there's no cause for concern. They're confident in controlling inflation, which is why Wall Street is almost certain the Federal Reserve will cut interest rates again on December 18th. Core inflation, a key metric for the Federal Reserve, stands at 3.3%. As we dig deeper into inflation trends over the past year, we've seen certain areas like car insurance, airfare, housing, and education experience sharp price hikes. On the other hand, prices for gas, rental cars, and electronics have dropped. Grocery prices, however, rose 0.5% in November, with eggs seeing an 8.2% jump in just a month. The Federal Reserve's priority remains keeping inflation under control, though they have a long-term goal of bringing it to 2%. Inflation, however, has been growing faster than wages, creating challenges for the average consumer. Over the last 5 years, inflation has risen by 23%, while median household income has only grown by 20%. As the Federal Reserve cuts rates in the short term, many worrying that this could worsen inflation. But Fed officials have hinted at a shift in 2025, when they plan to address the growing national debt, which is increasing at a faster rate than the economy. Meanwhile, the global economy braces for changes, including potential tariffs under a new presidential administration, which could impact trade with countries like Canada and China. For investors, understanding these economic shifts is crucial. While you don't need to invest in every affected country, you should be aware of the market dynamics driven by government spending, interest rate policies, and tariffs. Inflation, while problematic for consumers, can create opportunities for savvy investors who know how to navigate the system. To capitalize on these opportunities, it's important to be financially educated. Understand how inflation and government policies affect markets, invest wisely, and learn from market cycles. While crashes are inevitable, they can also create opportunities to buy stocks at a lower price. By educating yourself about the economy and how to invest, you can take advantage of these opportunities and build wealth.